Yo, 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 what is up, everybody? We got a big stream for you guys today. This is the fourth installment. Hard to believe it's the fourth installment by now, but this is the fourth installment of me and CrediBull Crypto talking charts. We basically wait about 6 to 12 months between these. And we've been pretty dialed in so far, but we've got some interesting things to discuss today because the last video we did, we were in all-time high territory on Bitcoin. It was July of 2025, July 23rd to be exact. And basically that stream was almost as high as Bitcoin had ever been. We obviously had that one more pop up a few months later in October. And then we've had a big correction. We got a lot of stuff going on outside of just the market correcting. We've got conflict in the Middle East, all sorts of stuff to discuss. But as you know, me and Cred here we're chart guys. We're chart first, news later. So I want to just bring him back on and just like get an update where his mind's at, what he's thinking. This has been requested tons of times in the DMs, in comments below charts and videos. So I said, let's get him back on. This is going to be a lot of fun. So Cred, let's test your audio here. How you doing, man?
Good. How's it going? Can you hear me?
I can hear you just fine. How about you guys, chat? Can you hear him okay? Sounds good. All right. Perfect. All right. Awesome, guys. Loud and clear. That's what we love to hear. So,
Perfect.
bro, what's going on, man? How have you been? What's the latest?
Man, I mean, like it's like it's been a crazy few months, obviously. I've been here for so long, and I know you've been here longer than I have. I think you got involved in this space in 2015. So I think for us, it's kind of just like another day in the life. We've been through so many ups and downs over the last decade nearly that I think for me, it's very, at this point, very like normalized. Like, yeah, everything's down and it sucks, but I've been here 5 times before, so it's just more of the same. And it's just a matter of getting through it so we can enjoy the next phase of expansion.
So, I think a lot of people, you know, they have the inability to be malleable with price, right? So, like you said, we've been here a long time. We've seen world-ending pandemics. We've seen so many different things. The industry seeming like it was about to evaporate overnight. Um, it's 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 one of those things where it's like, you just said it. We've been here before. So it's like, okay, these are the doldrums of a downtrend. And this is the kind of stuff you have to survive because this is where opportunity lies beyond. But I think a lot of people, they'll listen to people like us. They'll say, okay, well, Mayne said this was going to happen. CrediBull said this was going to happen. And then it doesn't. And then instead of saying, okay, well, things have changed, price is now lower, it's higher, there's different conditions in the mix, they go into this mode of like, well, you said this was going to happen and it didn't, so you must be an idiot. Like I saw this most recently with Benjamin Blunt's smart contractor, good friend of mine,
Yeah.
love the guy, and he was super bullish on Solana out of the bottom. And for the last couple of weeks, he was 100% correct. He's like, this looks good. It looks really constructive. And then we kind of had a bit of a breakdown the other day. And he's like, hey, this now kind of looks like shit. And everyone's like, well, 2 weeks ago, you said Sol looked amazing. Now you're saying Sol looks like shit. And they have the inability to realize, like, well, that's how it works, right? Like new
Yeah.
information comes out. We change our plans. We move things around. That's what trading is. So I think a lot of people want to ask you, probably what are you like? Has your view changed? And to summarize, guys, maybe I'll let you summarize. You can do it better than me. Maybe you just want to summarize kind of your view. I know you believed we were in like this multi-year bull run, if I'm not mistaken, out of the 2018 lows. And
Yeah.
this is kind of the wave five up to however high, 250K, wherever it goes. And your invalidation, if I recall correctly, was around 74K. We've now closed below there. So I'll let you pull up your chart here. What does this most recent price action mean for you? How have you changed your expectations? Are you still bullish? Are you now bearish? Is your old idea out of the window? Has it changed? Let us know.
Sure. So, great question, and I'll start off by saying, yeah, like the example you gave with Benjamin Blunt's, and Blunt's is a great guy, really smart guy, good trader, one of the best probably on the platform. He's publicly shown off his trading challenges in the past that I've seen. The guy knows what he's doing, and he's one of the real ones. Doesn't change the fact that he's going to get something wrong, like we always do. None of us who are actively trading have a perfect hit rate. And if anyone has, I would say like a 70+% hit rate, I think they're probably one of the best traders on the platform, which means that most of us are going to get 3 to 4 out of 10 things that we say wrong. And that's just the reality of the game that we play. I've given this example in the past, and people are like, well, if your lines break down and you just change the plan, then what's the point? Like, what's the point of all this? And I've given an example of like in the past, you have obviously in any sport or anything really that you do in this world, there's no guarantees, right? So professional NBA players that do this sport for a living, that make hundreds of millions of dollars off of their skill, still don't hit every single shot they take. That doesn't mean they don't take the shot. There's always going to be instances where you think something's going to happen and it doesn't play out as expected. That doesn't mean that your strategy or the way that you do things is useless. It just means that it's not perfect. And we, of course, understand that. But I think that's a big misconception in the space, especially for people that are new. They think that there's some secret formula, some secret thing that people can do to all of a sudden give them a 90 to 100% hit rate, and that someone who can do that has unlocked the secret, and everyone else is just playing a guessing game. And so I think that's really important to kind of highlight. And I've made videos on YouTube as well talking about how you can be consistently profitable with a 40% hit rate even. And so, yeah, there's with that out of the way, let's talk about like my higher time frame ideas and the significance of the 74K level, what it means that we've now broken below it, and kind of the logic behind that. I've talked about this in the past, but we'll go over it like a brief overview here. So yeah, as you said, Mayne, like the whole idea was that back in 2018, where we had this bottom at about 3K, three and some change. That was the last like significant bottom. And prior to that, obviously, we had that run on Bitcoin from what was a couple $100 to $20,000. And that was like the first big bull run, big bull cycle that many of us remember. I myself got involved in the space in 2017. So that was my first experience with the craziness of crypto. I know, Mayne, that you were actually involved even earlier, so you probably saw a few crazy things before that. But for most of us here, what we remember is 2017, the parabolic run up to 20K, and the collapse that followed. And if I look at this chart off of log scale, it looks pretty crazy. On log scale, it puts things into a little bit more perspective when it comes to like cyclical wave counts and all these things. Another thing that I want to kind of start off with is that those who understand the Elliott wave or have been following me for some time understand the general concept behind it. But for those who are new to the space, or those who've heard things about Elliott wave, because a lot of people have a lot to say about it, that don't quite understand the logic behind what it is, I'm going to make it very, very simple right here. And hopefully this will make sense to a lot of people that have misconceptions about it. But the core premise of Elliott wave is that it's just a way to follow uptrends and downtrends on different time frames at the same time. So, for example, the idea of a 5-wave move in Elliott wave is the concept of a higher time frame trending market forming a series of higher highs and higher lows over time, right? When you get a higher up, when you put in a significant low, you get a higher high, then a higher low, then a higher high, then a higher low, then a higher high. You have what is called an uptrend. All an uptrend is a series of higher highs and higher lows. And an Elliott wave, we call that a 5-wave count. All that means is that we have 5 waves, 1, 2, 3, 4, 5, aka an uptrend. So that's like the core premise of Elliott wave. And a lot of people don't understand that all we're doing in Elliott wave is identifying these sort of trends. But of course, we know that trends can occur on different time frames. So again, within a larger uptrend, you have smaller uptrends. In the case of our move from 15K to our all-time highs of 126K, you have again a significant low here. You have a local high here. You have a higher low here, a higher high here, a higher low here, and a higher high. And so again, this is in Elliott wave terms, a 5-wave count within a larger 5-wave count. In other words, a smaller time frame trend within a larger time frame uptrend. And that is all we're doing with Elliott wave in the simplest way. So with that out of the way, let's talk about 74K and why it was significant, why it mattered, and what it means now that we've broken it. And we'll start off by marking off 74K here on the chart. It's going to be this red line. I'll make it a solid red line to make it really clear where it stands. And the reason that this line is important is because, as you can see from this chart and the markings that I've shown here, from a very simple perspective of a trending market, we can kind of identify, it's pretty easy to identify local tops and significant bottoms, right? These levels here, this local top here at 35K, the local bottom here that formed at around 25K. Then we had another local top at 80K that preceded an 8-month-long consolidation that left us with a local bottom here at 45K. Then our next local top was here at 112K. And so the idea is that up until we break one of these significant higher lows, up until that point, we have no break in trend structure, no break in our significant levels of structure. So again, as you can see from this chart, this low here at 74K, just by looking at this, is obviously a significant low. Why? Because it preceded our break to new all-time highs, and it left us with a very key inflection point here on the chart. So at 126K, if we dip down to 100K, it sounds bad, but it's really not that big of a deal, because that is, for all intents and purposes, it's like a 10, 20% move off the highs, a 20% move off the highs. You'll notice that in the past, off of our lows at 15K, we saw multiple corrections that were about that size. Here's a 20% correction off of this local high, 20% correction off of this local high. This one was a 35% correction off the local highs. This one was a 33% correction off the local highs. And each of those ultimately led to a break of structure to the upside and continuation with the predominant trend to new all-time highs. So at a point where we've gotten a 20% dip, it is, in my opinion, way too early to be calling a top, because we've seen that sort of drawdown in the past, I think about 4 to 5 times on our way up from 15K. And every time we had that sort of drawdown, we ended up recovering and making new all-time highs. So if we can dip as much as 35% or 33% on a correction and still make new all-time highs, we've got to have a more structured outlook on how to determine when a break is significant and when it might just be a correction like the ones we just saw that leads to new all-time highs. And so you have to have a framework by which to evaluate these drawdowns. Otherwise, you're going to get people calling tops on every 20 or 30% drawdown. And in that case, they would have been left behind at 30K or at 60K or potentially even here at 90K before 126K. And so without some sort of framework, we're lost. And so the idea behind Elliott Wave is that it establishes this sort of framework that you can then rely on to let you know when you have a break that's more significant versus a drawdown that's not really as significant. And that first important level when it comes to market structure for Elliott Wave is 74K. On a break of 74K, we have the first high time frame shift in structure that we've had since 15K. Every prior high time frame inflection point, which I'll mark off now, so you guys can get an idea of where these inflection points are. Every prior high time frame inflection point was not breached on any of these moves, on any of these 30% corrections that we saw. None of these levels were breached. So this 74K was the first level that was actually breached from a rise on 15K. That told me, okay, there's a chance now at this point, after being bullish from 15K all the way up to 100K plus, there's finally a chance that our rally from 15K, the 5-wave move that we're trying to identify, might finally be over for the first time. Everything sound good so far, man? Are you keeping up? You have any questions?
I'm locked in, bro, as I assume everyone else is too.
Okay, perfect. So now we've established the relevance of 74K, right? Now, as I previously said, and I've been talking about this literally for months, until and unless 74K is breached, my assumption is we're going to see continuation of the prevailing trend. That's the assumption I've had since 15K. It served me well. We managed to get to 100K without changing our high time frame bias. At the point at which we broke this level, that's the first point at which I'm willing to say that, okay, yeah, that our top is potentially in, and there's a chance that we've now started a much larger bear market or a much larger bear cycle, the likes of which we haven't seen since 2021, or even prior to that in 2019, or even prior to that in 2017. With that being said, at the same time, you have a situation back here like we saw in 2021, where we did top, we then saw a 55% drawdown, and then we recovered and anyways went on to new all-time highs. Again, emphasizing that percent drawdowns by themselves are not enough to go off of to say that a cycle top may be in. There has to be more to your thesis than, oh, we dropped 40% or, oh, we dropped 50%. I know that sounds crazy. And if this was traditional markets, I probably wouldn't be saying this. But in crypto, the reality is that this market is more volatile than nearly any market in the world. And so you're going to get 30 to 40% drawdowns, which are considered quote unquote normal in the course of a macro bull cycle. And again, like we saw here in 2021, we saw a 55% correction, new all-time highs in the months that followed. And so I think it's pretty safe to say that when you consider, when you're talking about a bear market for a larger cycle or a smaller cycle, you're considering not only the percentage drawdown, but you're also considering the amount of time it takes for that asset to make new all-time highs again, right? And what I mean by that is this, the 80+% drawdown that we saw in 2017, in which we didn't make new all-time highs until 3 years later, is not the same as a 50% drawdown that made new all-time highs 4 to 5 months later. These two corrections, in terms of scope and size, and we call it degree in terms of Elliott wave, are two different corrections, okay? Some will call this 55% drawdown a bear market, which I think is fair, but and almost everyone will call the drawdown from 2017 a bear market, and that's fair as well. The reality is that a bear market in and of itself, just calling something a bear market is very, there's a lot of different definitions. Let's put it that way. And so typically when I talk about bear market, what I mean is I'm talking about a 2017 like bear market where we get a 70 to 80% crash that takes 5 years to recover. So a lot of people are like, when we were back here at in December of 2024, we collapsed from 110 down to 73. And everyone's like, CrediBull, why aren't you admitting it's a bear market? Admit it, it's a bear market. We're down like 35% and you're not saying it's a bear market. And I was like, it's not about the percentage drawdown, it's about structure. Structure didn't break within a few months, we're back at new all-time highs. And I think it's fair to say that you can't really argue that this quote unquote bear market is the same as the bear market that we saw in 2017, right? One took, it looks like April, May, took 3 months to recover and make new all-time highs. One took 2.5 years to recover and make new all-time highs. So in that sense, there's always this discussion and argument about, are we in a bear market? Are we in a bull market? And I think anyone who's addressing that topic really needs to talk about like context, like degrees. Like, yeah, we're in a bear market, but we're talking about a smaller bear market within a larger uptrend, which again, when I reference bear market, I'm typically talking about these larger degree bear markets. So that's where we are at right now. Now, I covered a few different options of where we can go from here. And let me say this straight up. I don't know which of these scenarios we're going to get. Sometimes I'm really confident about what I think is going to happen. Sometimes I'm not so confident. Sometimes I have absolutely no clue. And I'll give you guys 2 or 3 scenarios that I can see playing out here. I'll tell you guys what I think is most likely or what I want to see to think that one of the scenarios is most likely. But there's a few different ways to look at this, right? The first idea, which is going to be the most bearish, is that when we talk about these 5-wave moves in Elliott wave, the idea is that we've now completed the 5-wave move off of 3K that started in 2018. In other words, we've now completed this uptrending cycle, and it topped here at 126K. In that scenario, which is, again, this is the most bearish scenario, we're looking at a crash that is reminiscent of what we saw in 2017, meaning a 70, 80% drawdown that takes a significant amount of time to recover to new all-time highs. We're talking about 3 to 5 years. Okay, that is the most bearish scenario. It's not the most probable in my opinion, but it is the most bearish. The other alternative is that we are now still working on this 5th wave, and this gets a little bit more complex, but it's on the topic of what we call extended waves in Elliott wave. And to kind of make this make a little bit more sense to you, if we look at this off of log scale, because crypto is so volatile and we get such massive moves, the size and what we call the degree of this little move down here from 3 to 14K, which was the first wave of our 5, is so relatively small compared to the 3rd wave and even smaller compared to the 5th wave that we consider these moves like extended. We call them extended waves because they've become like 3 to 4 times the length of the original wave. And in Elliott wave, we call that extensions. In typical market cycles, you're just talking about like prolonged acceleration, prolonged bull cycles. But the idea is that this 5th wave could be complete now, and that could usher in the start of a major bear. Or we could be seeing a very extended 5th wave that dwarfs the prior waves the same way that the 1st wave is dwarfed by the 3rd wave, or the same way that the 1st wave is dwarfed by the 5th wave. So in other words, what that means is some sort of recovery here, and then essentially a parabolic advance to complete this cycle. And this parabolic advance would mean that this fifth wave that we're working on isn't yet complete, but the first segment of a larger five-wave move is complete. And what we're seeing now is that second segment before the third, the fourth, and the fifth. And again, this works the same way where we talked about you have like smaller trends within larger trends. The idea is that this first topping structure is the first leg of a larger trend, which will go parabolic and will finally finish off the cycle that began in 2018 with an incredible parabolic advance, the likes of which we haven't seen since 2017. And I say that because the top in 2021 was by definition not parabolic. It was literally a range that was formed. Some will call that like a distribution top. The top that we had now, once again, is literally a multi-month, or if not almost a multi-year range
For
here
sure.
at the high. And so when I talk about a blow off top, what I'm talking about is something that looks like this in 2017, where we have such euphoria and such greed and such excitement that the prices that are met at the top are unable to be met again for a number of years. That is like the definition of a blow off top: expansion at an accelerating rate to a point at which the uptrend cannot be sustained, and the crash that results leads us into a multi-year bear market. And you can see this across all assets. We saw it across silver. Silver had in the 1980s, I believe, or 1960s, a blow off top and then didn't recover for 40 years. And then it had another blow off top and it crashed again. And now we're seeing silver finally pick up again, and ironically enough, went for almost another blow off top over the last few months, as we saw. And so, by definition, a blow off top is not one in which we top, we come down 50%, then we top again, then we chop around for another 6 months, and then we finally break down. The idea is if this really was euphoria at these highs, then we would not have been able to reclaim those highs so quickly following a top. And that's what happened in 2021, and that's what happened here in 2025. We topped, we dropped down, I think 35%, and then we made a subsequent higher high. And then we came down again. And finally, now we're trading below that range. And so this, in my opinion, was not euphoria. And I know like even us, we've been here for the last 12 months. So we've seen the sort of complacency, the kind of like, I didn't see euphoria in the last 2 years. I saw a lot of people pissed off that Bitcoin was chopping around at the highs and also weren't doing shit, frankly. So I wasn't seeing people going crazy about how exciting the market was and everything's popping off and Bitcoin's going crazy. It was more like, okay, Bitcoin's at 100K, but we're looking for 250 and it's just chopping around, and when's it going to get a move on? There was no euphoria here. There was like people getting pissed off that we were ranging, really, and that we were making these 30% move downs and then coming back up and then moving down again. And so by definition, in my opinion, this is not a blow off top, and neither was 2021. And so what we're looking for at the end of a cycle is a macro cycle, meaning a high time frame cycle that's going to lead to a secular bear or a very large bear, is a blow off top, is that euphoria. And so the second scenario, this is probably the most bullish scenario, is that this would kind of be considered like, I guess you could call it almost like a super cycle type of idea, where we finished one leg, we're correcting that leg, but we still have the third, the fourth, and the fifth to go. Now, again, by definition, if we're seeing a parabolic advance, the rate at which we get this third, fourth, and fifth leg will be a lot faster than the amount of time it took for this first leg. So we're not talking about an equal amount of time. This leg took from 2022 to 2024, about 3 years. This should happen in a shorter time frame. So we're not talking about another 3 years of upside. We're talking about maybe another 1 to 2 years of upside if we put in a bottom somewhere around here and we head up to new all-time highs. This is the second scenario. And finally, the third scenario would be one in which we do have a first wave complete. The final scenario, which is kind of in the middle of the two, is that we have completed here a first, second, third. This is a really aggressive fourth, and then we're going to get a final fifth. So this is kind of in between the two, the very bearish and the very bullish, because it implies that our third wave is already complete, that our fourth wave is already complete, or close to complete, I should say, and then we have just one more like aggressive blow off top leg to the upside, which could go as high as like, obviously should break 125, but could go as high as 140, 150. And then again, we're going parabolic. So it should happen fairly quickly. And when that tops, we're then finally done. The reason that the last scenario I showed you guys was even more bullish, meaning the reason this is even more bullish, is because it implies that this was just the first leg and we have two more major upswings versus the one I just showed you where we just have one more major upswing left. And so those are the three scenarios that are on the table right now. I will say that the most bearish one, where we just saw a multi-year top and we're now due for essentially 4 to 5 years of bear market, I think that, in my opinion, is the least likely. And the reason for that is solely because of the fact that our top here mimicked the top of 2021. It was not a blow off top. We did not get euphoria. And as we all know, when you get a blow off top, the equal and opposite is true too. When you get a blow off top, you get an even more bearish kind of bear market that follows. The more aggressive we move up and top, the more aggressive the correction will be, and it'll take more time to digest. So the fact that we kind of topped here in what is essentially a topping range and it wasn't a blow off top tells me that the ensuing bear market shouldn't be the worst of the worst, which is what you'd expect after a blow off top. So that super bearish scenario is not my primary right now. What is my primary is probably that we're putting in the fourth wave and we have one more kind of killer blow off top fifth. And then the very, very bullish scenario where we have still the third wave to go, still the fourth wave to go, still the fifth wave to go. That one I find a little bit less likely. So I'm kind of in the middle in terms of what I think is most likely, although I will say all three are viable, and I definitely can't see the future and I can't make any guarantees about what's going to happen. But that is the logic behind where I see where we're at right now. That is the logic behind why 74K is relevant, because it's for the first time a signal that the move up off of 3K may finally be complete. And that opens up a number of different scenarios as we've now seen.
Thank you for the summary there, bro. I think the most valuable piece of insight there that I think people need to take away from this is the fact that something happened in price and then you adjusted, right? You said,
Yeah.
okay, now that 74K has been lost, what are now the potential outcomes? I always try and tell people that you need to think probabilistically when you're trading, because nobody knows, like you just said, what's going to happen. We're not fortune tellers. We have no way of predicting the future. It might look like that sometimes when you get something right. It's like, how did they know? But then you look equally as silly when you get something wrong and they're like, oh, this guy's an idiot. The idea here is you have an edge. You have a system in which you trade that you have battle tested over thousands and thousands of inputs. And each different scenario that you map out, you ascribe a level of probability to. So when you hear him talking and say, I think this is the least likely, the least probable, this is my base case, that's how I trade as well. It might look a little different than what Cred does here, but it's the same way. I'm always looking at opportunities for upside, for downside, for sideways, for different ways price can attack a range. And then I'm assigning probabilities to those. And then as you get more information, as price continues to develop, one of those scenarios might end up playing out, and hopefully you have a way to execute on that. And so I think the issue a lot of people have is we've had these conversations a few times now over quite literally years. You know, you've been making a macro projection since basically 2017-18. We're now 8 years into this thing, right? So I think some people are super set in stone being like, well, he said this. And it's like, dude, I mean, over 8 years, a lot can happen. So to that end, I want to say a couple of things, and I'll ask you another question. One, about the no euphoria blow off top, I agree. I really like the way that Benjamin Cowan describes it, which is like we topped on complacency almost. Like we almost were all like, okay, you know, we hit 100K. We're in a range. This must be accumulation before the next leg up. And then it just didn't happen. Right. Yeah. So there was absolutely no parabolic top. I agree with you. Now, my question, I guess, is twofold. Is one, is there potential in your mind that the reason we haven't had this parabolic blow off the top is because of the maturation of the asset and all the different things that have happened over the last handful of years where, hey, it just doesn't trade like it used to? And I'll caveat that with, you know, you might think, well, gold, one of the most mature assets of all time, same with silver, those managed to have parabolic. Like I have my chart up here. This is the kind of top. I'm looking at gold. I think this is the kind of top we were all expecting on Bitcoin, right? We were expecting this week over week vertical ascension where everyone is like, there's no way it can go any higher. And then eventually everyone's on board. People are lining up around the block to buy physical gold. And then it has its massive correction. And by a pure percentage down move metric, technically gold's in a bear market. Obviously, I don't think anyone looking at the gold chart believes we're in a bear market, but that goes back to your point on the percentage drop alone is not enough to determine whether or not we're in a bear market. By that metric, gold has had, it's down over 20% in a short period of time. It's technically in a bear market. I don't think anyone would say that. So, do you think there's any validity to that? Like, hey, the market's just changing and maybe these parabolic ascents are no longer going to happen because of the institutional flows that are coming in and out of Bitcoin, the way that the market structure itself has fundamentally changed? Or are you like, because I don't know if you guys notice this. I know, like, you never talk about the news. You're not talking about Iran, oil prices skyrocketing, Trump. Like, you don't talk. You're just like, this is what the chart says. Do you factor in any of that at all, or you're like, hey, this is still following a potential Elliott wave scenario, and that's just how I'm going to trade it?
Yeah, so great questions, and I think that the correct answer is like kind of like somewhere in between, where I agree that as assets mature, the volatility decreases as they get bigger in size. Potential for upside is reduced over time, and volatility decreases over time. And this means that like assets like silver, like gold, that have been here for hundreds of years, they take a lot longer to play out in these bull cycles, right? So obviously, like silver, we can go to the silver chart first. Actually, I was on the SPX, but we'll start with silver, and we'll just take a look at like historically how silver has performed. And you can see here that obviously we have a chart here that goes back to the 1800s, so it's been here for quite a while. And our last blow off top, or our first blow off top on silver, was January 1980. And following that, we then collapsed and consolidated for a really long time at $3 after falling from a high of 47, so 90% down. And then we got what was like the next kind of aggressive move to back to prior all-time highs. That happened in 2011. So we're talking about a 30-year gap between major expansion phases on silver. And then following that top in 2011, we corrected. And this is like the cleanest. If someone wanted to, this should be like in the trader's handbook for what a cup and handle is, because this is like by definition a perfect cup and handle, like a textbook cup and handle. But the concept is simply that you get a very aggressive expansion, you correct. When price reaches that level of prior expansion, you get some sell pressure because people are taking profit after being underwater for 30 years. And so you get another dip, and then that dip consolidates, and then you see proper, true price expansion once everyone who wanted to take profit after holding from being underwater has cashed out, and now you have new people buying up. And so now you have most of the float absorbed, and then you see proper price expansion. Now, the proper price expansion happened in 2025. So once again, we're talking about a 14-year gap between this rise and subsequent expansion. So all in all, we're talking about from the last blow off top till true price expansion, we're talking about a 46-year gap. And again, what we're seeing here on silver is proof and evidence that blow off tops, parabolic advances will continue to happen, even in assets that are as old as silver that have been trading for 200 years, or gold, as we obviously know. But they may take more time to form and to play out. And I think that is the key, that I don't think that crypto, I agree that crypto has matured. Obviously, it's a lot bigger than it was in 2017. I don't think that necessarily means that we're not going to see blow off tops anymore, because really, if you look at the numbers, crypto as a whole, I always quote these numbers because they really put things into perspective. Crypto as a whole, I think now actually is like a $2 trillion market cap. I think at its high it was 3 trillion. Global equities have crossed 150 trillion. Gold sits at over 30 trillion. And a couple of years ago, gold was at 10 trillion. And so when we talk about the relative size and maturity of crypto, yes, it has matured a lot over the last 5 years, 10 years. Yes, it is still a drop in the bucket in terms of global assets. It is still very, very small relative to these massive markets that are being traded today that do have blow off tops. So if an asset like silver or gold that has a $30 trillion market cap, or even traditional equities, we can take a look at the SPX. If these asset classes that are in the tens of trillions, we're talking about hundreds of trillions, can have parabolic advances, the likes of which we are seeing actually now, if you look at this SPX chart, then yeah, absolutely, I think crypto will have parabolic advances in the future. No, I do not think that was a thing of the past. No, I do not think that ended in 2017. it makes no sense to me to think that an asset as young and as volatile as crypto won't have a blow off top when we're seeing assets that are 10, 20, 30, 40 times the size and far more mature seeing blow off tops today. So I think that hopefully that answers the question, at least part of the question.
Totally. No,
It
totally.
makes
The second part was, are you looking like we're in a time of macro uncertainty? There's global there's things happening on around the globe that are, major. I mean, what's going on in the Middle East, surging energy prices, people are talking about, COVID style lockdowns, but for energy restriction lockdowns. I'm someone who looks at the chart, tries to make all of my decisions based on the chart, and if the news injects some volatility, then great, so be it. But I'm a chart focused trader, and I find that the news kind of fits in along with what the chart was already doing. I would like to think you're the same because I don't see you really often talk about the news at all and how, like, if we do have some sort of escalation in the Middle East, does that change how you're, managing crypto? And it seems like no.
Yeah, so great question. And so again, I think, yeah, once again, this is like a really good question. And I think context is important, right? So what I will say is that generally, like you said, I'm focused on the chart because in my opinion, that kind of prices in everything. Obviously, I don't think markets are perfectly efficient, but the idea is that people with a lot more knowledge about what's going on than I have are actively trading these assets. And so their reflection of whether the markets are bullish or bearish are probably more accurate than my reflection off of reading a headline. And so if the news or what we're hearing is really as bad as it sounds, then over time, and it depends on a lot of things, but over time that information gets priced in the market by people again that have a lot more resources and knowledge than someone like me who's reading a headline off of my screen at home. So with that being said, any news or headlines I kind of take with a grain of salt because a lot of things are going on in the background with second and third and fourth and fifth order effects on these markets, and we simply don't have access to that data. What we do have access to, like everyone else, is the price on the chart and price action with the candles that we look at. That wholly encompasses the known information out there by the actors that are actively participating in these markets. And so to me, that first and foremost is the most important thing, hands down. However, when we look at the current environment, and like let's take a look at the SPX, when we look at the current environment and we zoom out a little bit, and we can recognize that what we're seeing here in traditional equities is the makings of we're well within at this point a parabolic advance, but the makings of a blow off top, right? We don't know how high this is going to go before the actual top. It can certainly climb higher. And we also know that the most aggressive movements happen in this last 10% when we're going parabolic. So who knows? Maybe we hit 10,000 on the SPX. I really can't say. What I can say is that whenever we do finally top and this thing blows off, the subsequent correction is going to be a correction worse than we've seen over the last 30 to 40 years. It's going to make this 2008 correction look like peanuts. It's going to be massive. And that is simply the result of price going vertical and us seeing a blow off top and seeing that irrational exuberance or irrational excitement that we've seen and that we're seeing now in tech stocks and the like. So with this context in the background, there will probably be some major event that happens somewhere around the globe that results in some level of selling that puts in a major top that cannot be reclaimed. And at that point, we will then have, of course, we'll then know that our top is in, and we will start what is likely to be a decades-long correction. I don't know what that event will be. I don't know when it'll occur, but there will likely be some event like that. A good example that comes to mind is in the uranium markets, we had I'm trying to find a chart with complete price history. It's a little bit tricky, but I'm going to go to one of the stocks that I follow, and it looks similar to the spot price of uranium. Actually, let me see if I can pull up like the uranium spot price. If I can, and if not, okay, we'll just go to that chart of UUUU, which is one of the uranium producers within the US. And if we look at this chart, you'll notice something really quickly. The year 2011 looks pretty significant, right? We have this massive spike in price going pretty aggressively vertical, and then what followed was a major collapse in price that lasted for, it looks like 10 plus years, right? Almost 15 years now, and we still haven't reclaimed those levels. Well, I can tell you that what happened here almost on this day, February of 2011 or January of 2011, was the infamous nuclear reactor disaster in Japan. I think it was like Fukushima or something like that, where a nuclear reactor in Japan like essentially blew up and caused a bunch of damage. And that marked the top of the uranium spot price, as well as the top of a lot of these uranium stocks at the time. And so that one event can be matched almost perfectly with this top in spot uranium prices. And as we can see, that disaster led us into a bear market that would then last for the next 15 years. And we're now starting to climb out of it. And so this is a great example of how, yes, at some point, especially in market conditions where prices go near vertical, which was the case back here in the early 2000s with uranium, price was going nearly vertical because of a shortage issue. When this disaster happened, Japan went ahead and closed off all of their nuclear reactors, and that kind of ushered in this mega bear market. So in a scenario where we're in today, where we have the SPX climbing like it hasn't climbed in anywhere close to in the past decades, the rate of ascent, as we can see, is simply increasing and increasing and increasing. There will probably be some major event that leads and that matches nicely with a major top. So in this context, I can see there being value to sort of being aware of what's going on in the world and understanding that market conditions right now are at a point where if something does go wrong on a high level, yes, it could mark a significant top that ushers in a decade-long bear market. Again, in normal circumstances, it's not something I pay much attention to at all. In current circumstances, I think it's worth paying attention to because of this context. But again, I think it's also important to emphasize that you don't want to get so caught up in what's going on that you forget about the chart and you ignore our key levels of market structure and our key areas that make a difference. Again, we can again look at like COVID, the COVID era and the COVID crash on the SPX. I think that was right here, February of 2020, where price dropped some 35% and then erupted into new all-time highs and continued this parabolic advance. So this seemed crazy, like the world was ending. I remember people arguing about buying toilet paper, and it seemed like the end of the world, but it was really just a speed bump in this parabolic advance. And that could happen again tomorrow or next week, where we get some aggressive reaction in the markets that causes a 20, 30% correction, but ultimately just leads to a recovery and new all-time highs. And so once again, this is actually a great example of how I look at structure in terms of Elliott wave. If I were to look at this chart, I can easily pinpoint the 74K level of the SPX, which would be this level right here at 4,800. Okay, now that is from the highs, that is a 30% drawdown, right? But again, we saw similar percentage drawdowns here, 27% here. We saw 35% here. And so by those metrics, yeah, a 30% drawdown is pretty bad, but we've already seen that twice on this parabolic advance, and both of those times recovered to new all-time highs. And so anything above this level right here at 4,800, in my eyes, is completely fair game for any sort of pullback. We can pull back to, and Mayne, obviously you'll recognize this massive order block right here. And that would be technically a good place to start looking for opportunities to buy the dip if you believe that we're headed higher. If we pull back into the blue zone, I can guarantee you, just because of the way the markets work, you're going to get a lot of people panicking and freaking out and calling tops. In reality, this is probably where you'd start looking to buy the dip if you're trying to catch a move on to potentially new all-time highs. And so again, just like we had 74K at Bitcoin, that's 4,800 here. And until and unless 4,800 is breached, I'm assuming that every correction is going to be like the prior ones, that were ugly, that were deep, but that didn't break significant market structure and just led to new all-time highs.
Yeah, it's. I like that you draw the biggest order block of all time and say Mayne knows all about this. But I agree on the S&P. And there's a couple comments in the chat here that I want to touch on. One, someone saying it's impossible for a dip like this in the S&P to happen. I would argue that it's equally as impossible for us to have a rally in the S&P like we've had. Like, this has been a nonstop parabolic ascent for like a decade. Like, this has been one of the most aggressive up moves I've seen in my entire life. And I've been alive a lot longer than some of the people probably in this chat here. This has been a crazy parabolic advance with no real bear market or proper correction since the last one in 2008. I believe we've been in a bull market this entire time. And I agree, when this eventually does unwind, we probably are in for some sort of lost decade. Where it takes significant amount of time for us to ever recover those highs. I think that that's coming. Where that comes from, I don't know. Short-term trading, I'm kind of similar to you. Like, I think this entire tariff low, which is that 4,800 level that you mentioned, to the current high, is a tradable range. Absolutely. And we can have a deep correction into this range and still put in a higher low and blast off to new highs. And from a short-term macro perspective, it could be something as simple as war escalation causing price to fall down. Maybe we go to 6,000, maybe under 6,000, and then there's a ceasefire. The conflict in the Middle East is resolved, and just like COVID you mentioned there, we rocket back up to new highs. So I do think it's very interesting that people still at this point, based on what we've seen in markets over the last 10 years, think that anything is out of the realm of possibility. If you've been paying attention to markets even since COVID, you should assume that literally anything can happen. Literally anything can happen. The rally we've had out of the COVID lows in risk assets has been unprecedented. We went to almost zero on Bitcoin in COVID to over 100K only a few years later. So I would never say something's impossible. Anything is possible in markets, and things that you might never expect to happen can happen. You need to open yourself up to all of these different possibilities. And then your goal really is to try and execute and profit from them. Something that Flood said on a podcast recently that I thought was quite poignant was sometimes the best alpha is having money. And it's not necessarily meaning you have to be rich or have, tens of millions of dollars. It's quite simply you have money to make decisions when other people don't. And this example that you went over on the S&P is, to me, the perfect demonstration of that. If we do get some sort of large correction in the S&P this year to 5,000 to 6,000, whatever it is, when people start freaking out and you have dry powder, that's how real money is made in these markets. And crypto is no different, as you know, and as many people know. And this is going to segue nicely into my next question, but altcoins, right? A lot of people who get decimated on altcoins are the people who are buying during the euphoria and the mania. And then altcoins drop 80, 90%. And then they don't have any money left to take advantage when the opportunity actually arises. And a lot of these alt charts, I'm not quite ready to... guys, oil went to zero in COVID. Now we're worried about oil going to 250. Okay. Anything can happen. But a lot of these altcoin charts look bottomed, and I'm not a big altcoin trader. I monitor them. I still believe Bitcoin has potential for further downside here, which means I think altcoins probably haven't bottomed yet, but there's always going to be that inflection point where Bitcoin has that last correction and alts kind of hold steady, and you see that inversion in the alt BTC pairs. You see that Bitcoin dominance kind of breakdown. I know you're someone who's tracking alts like CRV, CVX, many others. I think some of these charts look like interesting. I'm not touching them yet, and I know it's been a long and painful journey. A lot of people are like, when is this going to go up? And it's like, dude, the difference, in my opinion, between Bitcoin and alts is Bitcoin kind of operates in this like 1 year downtrend accumulation bear market, and then it's like 2 years of up, whereas alts are almost the exact opposite. It's like 2 to 3 years of nothing happens, and then it's a year of insanity. And most people are kind of weeded out simply by, obviously the big drawdown that leads into it, but by the time element. And they can't remain patient. And they look at a coin like, I'll let you pull up your chart in a second here, but I know you talk about CRV a lot. And people look at it and go, well, man, it's like still near the lows. CrediBull has been telling me, it looks good and it's still near the lows. It's like, yeah, but in reality, it's kind of in just a massive what you would assume is a bottoming range. Like if this thing's going to bottom, this is potentially a massive bottoming range that could lead to a massive expansion if it breaks out. And so I think a lot of people's frustration, as they hear someone like us who's got a big following online talk about an altcoin that we like, and it doesn't immediately pump. It doesn't immediately go up, or it goes up and then it retraces the entire move and it comes back to the low. And CRV has been, I'm trying to find one with better chart history here, but it's been in this kind of, bottoming range for 2 years now, where it's been between 20 cents and as high as like a $1.20. And it's kind of gone from the low to the high, back to the high, back to the low. And it's like, okay, like it's still in this range. It's a big range. There's been big drawdowns within this range, but it doesn't mean that potentially, the analysis is wrong. And so this is much more your domain than mine. What do you think about altcoins right now? Has anything that's happened in Bitcoin changed your view on your altcoin holdings, the potential for an alt season, anything like that?
Yeah, so great questions. And yeah, in general, I think that right now is the time to be identifying which alts you have confidence in from a fundamental perspective in the long term, and dollar cost averaging when they're below 90% off their highs. And I say that because there's some alts at this point, at this stage of the cycle, or at this stage of the asset class. It's a little bit different than 2017, because in 2017 we had a relatively small amount of altcoins. And so generally at that stage, everything kind of ran together. You had Bitcoin blow off at 20K, and then you had, it was actually, I think it was just like literally like 30 days, or like, I think 30 to 60 days max of every alt that you looked at just popping off. And that was 2017, and the number of alts was pretty small compared to what they are today. One alt that really caught my eye back then in 2018 was Chainlink. And the reason for that is because Chainlink actually ran post Bitcoin crash, post major alt season. It kind of ran on its own in 2018. And it ran all the way to $50, which was the high that it put in at the time. But what Chainlink showed me for the first time in history pretty much was a altcoin actually running. If I can, let me find the chart real quick. An altcoin kind of running on its own, not with the rest of the crowd, but after the rest of the crowd. And this is the chart of Chainlink. And so imagine back here in 2018, at this point, or at the point of Chainlink's birth, I guess, 2018, 2019, Bitcoin had crashed, altcoins had their alt season, altcoins had crashed, everything had crashed at this point. And Chainlink ran to 50, actually was, yeah, pretty much up only from 2019 and continued to be up only until 2021. And obviously in 2020, 2021, we had like a little mini alt season, some alts popped off. But Chainlink was basically running from inception in 2017, 2018, all the way up until 2021. It didn't really have any sort of a major correction until then. Let me see if I can find, there you go. This is what I was looking for. So this is actually the full price history on Chainlink. And so here, it was born in September of 2017. So Bitcoin topped, I want to say, in December of 2017. And then the major alt season happened like a month or two later. And so at that point, Chainlink was chopping around 30 to 40 cents. And it began really aggressively expanding in 2019, before most altcoins were. And it would then go on to actually hit $50 in 2021, at which point we were seeing a little bit of resurgence across the board. But my point is that at this stage, you have a bunch of alts now, and they're all at relatively different stages of their respective cycles. You have the alts like Chainlink, which are, in my opinion, getting ready for their next expansion phase. You can see we had that aggressive rally to $50. We collapsed. We spent about a year just literally chopping within a range between $5 and $8, like literally a year within that $3 range. This is probably the cleanest and clearest example of accumulation I've ever seen on a crypto chart. A tight range over a long period of time, minimal volatility, right under these macro lows. And then we saw some expansion. And we've now tested that, as you can see, multiple times. And you can see every time that we test this, we see a pop to the upside. And so you have some assets like Chainlink that may be getting ready for their next phase of expansion after what is essentially years and years of accumulation. And then you have some other assets like Solana that are in a different stage of their cycle where they have had significant expansion, as we know. Solana was another one that ran in 2021, had astronomical gains, then collapsed, then made new all-time highs again in 2025, and is now correcting again. And something like Solana, I think, if we just look at the Chainlink example, if we consider this cluster like a multi-year consolidation period, and we just view this as like maybe one large range, I think that something like Solana could realistically potentially bleed a little bit lower down to like the $40 to $50 range before seeing its next true expansion phase. And you can view this again as like one giant range. You can also probably go like this and see this as one giant range and everything below here a deviation. But the point being is that something like Solana could very reasonably draw down another 30, 40, 50%, which doesn't mean that it's bad by any means or anything like that. It just means that it's not yet ready for expansion, and it could then see expansion. Now, $90 down to 48 is a 50% drop, and you're going to have people that lose their minds because of that. But when you look at the grand scheme of things, considering that we were at $6 in 2023, a drop down to 40 to 50 really isn't that big of a deal, and it could just be more accumulation before the true expansion. So for the first time, we have all these altcoins that are at different stages of their cycles. And so for the first time now, you have to be a little bit more selective about what you're deciding a dollar cost average into. There's some altcoins that are trading 90 to 95% below their highs. There's some altcoins that are only 60 to 70% below their highs. And so for me personally, what I'm focusing on is altcoins that are down 90+% of their highs that do have some sort of fundamental value or relevance that'll keep them essentially alive until the next phase of expansion across the board. And this is where like fundamentals come into play, because if you're holding an asset like a meme coin that's down 95% from the highs or 97% from the highs, and you bought it because it sounded cool or because there was a lot of hype around it or because you thought it was funny, and now it's down 99%, you're probably not feeling very good about your investment right now. You're probably not super confident about it. You're probably anxious. You're probably wondering if it's going to catch back on or if some other new shiny meme is going to take its place. I mean, we have seen, starting with Doge, obviously, a number of memes come and go. Each of them has their wave, and there's always something new at the end of the tunnel, right? We had WIF had its spectacular run. WIF is now trading at 90+% below its highs, and at one point in time, WIF seemed like the next Doge, and it had all the mind share, it had all the attention. It's currently trading at 19 cents off of a high from nearly $5. Is there a chance that WIF recovers? Absolutely, I think there's a chance. But I also know that after WIF came Fartcoin, came, I don't even know what the hot memes are right now, but I know that there's like 50 of them that came after WIF that gained a lot of mind share and attention after WIF. And so you have to ultimately decide what differentiates WIF from all these newer memes. And the reality is not very much. What makes a meme successful is attention. And if you don't have something to differentiate yourself from the other 100 memes that are coming out every day, then attention is fleeting. And if that's all you have, it's not going to last forever. And that's where the fundamentals come in. An asset that's down 90% with zero fundamental value that was existing and thriving on attention that is no longer there is going to have a really, really hard time to make it back to those old highs when there's a flood of other altcoins or altcoins in the space that are now getting that new attention and may have fundamental value. An altcoin like CRV, in my opinion, that is down 90% from the highs, but has fundamental value. Just for some context, CRV just last month, Curve Dex, the Dex that's behind the coin, broke all-time highs in terms of users, the number of users since inception. So CRV was launched in 2021, and just last month made a new all-time high in the number of daily users. So these are metrics that we look at to tell us that this asset isn't just a meme. It is actually being used. There's a reason it's being used as some sort of fundamental value. And as we know, CRV actually shares a portion of all the revenue and profit generated with those that are holding or locking the token. And so there's actual value there that is going to token holders that keeps it relevant during these down periods. And all we're trying to do is stay relevant and stay alive until the next market expansion phase, where everything that has some sort of relevancy will pump to some extent. It's a lot easier in positive market environments for coins that have no value to pump, but it's even more likely that a coin that does have value will pump. And so that is essentially why I'm not concerned about, CRV being down 90% from the highs or any of the other assets that I own, because I understand that there is fundamental value that exists there and makes this asset relevant. And it's a matter of time before better market conditions and a massive upswing in price. And that is why I am not as concerned. Now, if I was holding a random meme coin that I bought a year ago because it sounded cool or because there was hype around it at the time, and that meme coin is down 95%, I'm not feeling so calm, like, and collected right now. I'm freaking out. I'm wondering if I made a wrong move. I'm wondering if people are gonna recognize this meme coin 6 months down the road. I'm wondering if I should cut my losses. All these questions come into play when you don't have confidence in the asset that you've invested in. For some alts, it's easier to have confidence in them than others, and that's why I only pick alts that I have confidence in. And that's what I'd say for anyone who's watching. If you're buying an altcoin, it's because you've done your research and you have the confidence to hold it in the worst of times so that you can experience that upside in the best of times. If you're buying an asset that you don't have confidence in, good luck getting through those worst of times, because for someone who's been here for almost a decade, I can tell you they are quite difficult. And for someone who's just getting into the space and has been here for a year or two, they're 10 times more difficult. And the whole idea is you're trying to avoid capitulating and selling at the bottom before an ultimate price rise. If you're bullish on this space, if you're bullish in the space as a whole, and you think we have a lot higher to go, whether it takes a year or 5 years, then your whole purpose is to get through these tough times so you can experience a price appreciation in those better times. Um, was that, I can't even remember the question now because I went off on a
No.
tangent.
I asked for your opinion on altcoins, and it's interesting. It's almost like it's a flight back to quality, right? In times
Yeah,
like these,
exactly.
because during the mania, you want the thing that has the most attention. You want to be in the whiff, the fart coin, whatever it is. But when the bear market comes, you realize that that only thing that coin had going for it was attention, and now that that attention is gone, what's the point of it going up again? Whereas you look at a coin like you mentioned, CRV. This is why I kind of agree with Arthur's bull case on hype. I don't necessarily agree with the price target or the timing, but the fact that hype has a business, right? It makes money and it
Yeah.
uses that money to buy back the token. That's something where it says, okay, this is a coin I could see persisting cycle after cycle. And I think the chart you showed on Link is one of the best examples of all of this. Is these altcoins are a waiting game to get these crazy moves on these altcoins, right? Unless you're in the mania period, during the meme season that we had, a lot of these coins, it's like just a matter of waiting and being patient and buying near those accumulation lows where the risk reward is skewed in your favor. And then you have the opportunity for some of these large outsized moves. And as this industry progresses, I think we're going to see more links. And what I mean by that is we're going to see more coins that move async the rest of the market, like you have in traditional markets, where you can have a bull run going on in a certain sector, a certain asset class, where the S&P might be going sideways or down or whatever, where right now we're still kind of in the world of like everything follows Bitcoin for the most part. There's obviously some exceptions, but exceptions don't make the rule. But I do think that will change over time. So speaking of alts and kind of in the same vein, we obviously had the Clarity Act update today, where effectively Circle was told that stablecoins cannot be used for yield farming, which is one of the major use cases. And a lot of DeFi stuff is potentially, in the firing line here in terms of KYC, AML. Really, when you think about this logically, it's like, okay, well, who's lobbying the government to come after decentralized finance? It's banks, right? Like,
Yeah.
why would anyone use a bank when you can quite literally go online now, use something like Curve, and collect yield where, first of all, it's higher than what the bank's going to give you. The fees are less, and you're in total control of your assets basically the entire time.
Yeah.
So they are a threat to the traditional financial system. So it makes sense that the lobbies are doing what they do best, which is lobbying the government to try and protect these kind of old incumbent players. Does that affect your thesis at all?
Um, to some extent, but at the same time, like, I guess what's important is understanding these regulations and how they impact obviously these assets. With regards to specifically Curve, for example, I've read different things, and I'm not a lawyer by any means, or I haven't looked at the actual documents by any means, but I've heard different things and nuances that some believe this is actually going to be better for decentralized finance applications that are truly decentralized. Some are saying that this is going to kind of separate the uh, the pretend decentralized assets that are really centralized versus the ones that are actually decentralized. And there is a lot of nuance surrounding these sort of bills. So it's not something that I myself have a strong opinion on. I pretty much look at what other people say, see what makes sense to me, and go from there. But I think at the end of the day, the idea behind DeFi and the idea behind crypto as a whole really is that no one country's regulations can kind of halt it in its tracks, right? The idea was that with decentralized digital assets, which is what crypto is meant to be, is that it cannot be stopped by one government or one entity, right? And I think I believe in that core premise that to some degree, this disruption, this development is going to happen, whether traditional finance joins and plays a role or not. There will be attempts to slow it down, which we've obviously seen in the past. I mean, the SEC lawsuit against Ripple that they then lost is a great example. There will be attempts along the way by those who are in power to hold things back, and they may succeed in certain aspects or certain avenues. Like we may see a situation in which banks will hold specific powers or advantages over using DeFi exclusively. But at the end of the day, I wouldn't be here if I thought that any of that stuff is going to halt crypto in its tracks. I think at the end of the day, there will be regulations that crypto will have to adhere to a certain level of those regulations. But the core infrastructure that we have, the decentralized infrastructure, I don't think is going away. I think at the end of the day, there will have to be compromise to some extent. And the beauty of crypto is that it's global. So no one world or one organization or one entity can kind of establish their dominion over it. And I think we've gotten to a point now where even traditional finance entities and if not the banks and many corporations are now integrating crypto into their workflows and integrating crypto into their back end products and services to a point where we're proliferating, whether the banks like it or not. So now I think it's more a matter of where will it's an inevitability in my eyes that this sector grows. So I think it's now going to be a matter of how do banks get their piece of the pie rather than kind of
Totally.
prevent it altogether.
Yeah, I think DeFi is one of the most novel use cases for crypto that I've seen in my entire lifetime being here.
Yeah,
Obviously, the idea of self custody, sending money globally, no middleman, all that stuff, great, totally. Store value, TBD. If you want your store value to be unbelievably volatile, sure, but over a long time frame, I'm bullish on Bitcoin, for many reasons.
yeah,
But in terms of like actual use cases, like when people ask me, it's like, well, what does crypto do? What is it good for, other than I can keep money out of the bank, in my safe on a ledger, whatever it is. DeFi,
yeah,
I think, was one of and that's what made that market cycle specifically so interesting, because there was so much experimentation going on. And I think people are so quick to forget how much stuff happened during the DeFi super cycle. And a lot of these companies are still around, making money, actual revenue, doing real things, having real utility. But people have the inability to bifurcate the number on the screen in terms of the price of the coin and what the protocol is actually doing and what it's accomplished. And I think that's where some of this alpha may be in future months, weeks, years, whatever you want, in crypto, is saying, okay, well, which one of these protocols is there a dislocation between the value of what they're doing and what they've created versus the price of the token?
yeah,
And this is how regular companies, by the way, are traded and valued, and how people spot opportunities is they look at things like price to earnings ratio. They're looking at all these different metrics of a company and say, okay, this is mispriced. This stock should be worth more based on how profitable this company is. I totally could see a future where many of these crypto companies get to a point where, the initial hype cycle of the token has died. And now it's like, okay, the token's going to go up because there's actual value there. And I think that's something that's missing. And part of it is the infrastructure we have and how tokens were launched. Like in the real world, you do an IPO after the company's already raised money, it's built a product, it's doing well, then it goes public. Whereas now it's kind of like you do the IPO first, And then you say, hey, I promise I'm going to build this with the money that you give me. And then most, of course, don't build anything. But I think that's something very interesting to watch as a potential future wave for some of these altcoins.
Yeah, I agree completely.
So, anything you want to talk about chart wise? We know you're watching CRV. You showed us Link. I think a lot of people, the Link Marines, obviously are still very strong all these years later. Are there any charts that are kind of perking your interest? And are you waiting for Bitcoin to do something before you deploy, or you're deploying kind of agnostic to what Bitcoin's doing?
Yeah, so great question, and I'll cover it kind of like holistically using one example here. But the idea that I'm going to share with you, the lessons you should take from this, essentially apply to any alts right now that you like. And we'll start off by saying that like if I thought I was the best trader in the world, and that I could clearly anticipate when my favorite alt was going to see a massive 20x pump, then yeah, I wouldn't be deploying right now. I'd wait for that moment when I think it's blatantly obvious that we're about to go on a massive run and I'd deploy then. The entire reason that I've been deploying at these lows 90% down from the highs is because I recognize that I'm not a perfect trader, that I'm not the best out there. I don't even think the best out there could do this either. But the point is that if you're trying to perfectly time your entry into an asset that you like, waiting for the pico bottom of Bitcoin's correction, whether it be now or $20,000 lower, you'll probably miss the boat entirely, or you'll end up having to FOMO in on some random 100 to 200% candle, and you'll be left floundering without a plan because you waited till the last minute. The reality is that no matter how great of a trader you are, there's a reason that we talk about like accumulation periods. Like even the biggest entities in the world aren't one clipping their favorite asset. They're slowly buying over a designated range over months, if not years. And again, a good example is XRP, and this example is what I'll kind of use to demonstrate the logic behind accumulating over a period of time as opposed to just jumping right into your asset of choice. This concept and this logic applies to every asset in the space. It's not unique to XRP, but this is one of the clearest examples I found. So we'll go with this. So this is the XRP Bitcoin chart. And obviously, as we can see, XRP, one of the best performing assets in 2017, had a massive rise from pretty much the lows of this range. If I were to extend this line out to this low that we had in 2017, you can see that the current range lows that I've marked off here, this oscillation on the XRP Bitcoin chart, matches up the lows before what was in 2017 a 3,200% rise, which is above a 30x in a time frame of, this was April or March of 2017, and this ended in May of 2017. So March, April, May, literally 3 months, we had a 30x rise. We're back at those levels, and we've been at those levels essentially since 2021, and we've been chopping around between that lower boundary here in red and this upper boundary right over here. That is about it's like a 200% range. It's a very big range if you look at it from that perspective. But the idea here is that XRP against Bitcoin has been a great buy at the range lows, maybe a not so great buy at these local range highs. But zooming out, the core idea is that if this is a giant accumulation range, which it looks to be, since we've been oscillating between these two levels now for nearly 6 years, then the subsequent expansion, when it occurs, will be pretty aggressive and pretty violent. Probably similar to something that we saw in 2017, with us going up 10, 20, 30x in a matter of literally months. Now, it may not be as violent. I'm not saying I'm calling for a $50 XRP necessarily. What I am saying is that it'll be very aggressive, especially following the 6 years of consolidation that we've seen. Now, what I want to kind of emphasize is XRP up until very recently on the USD pairing, and we'll actually pull these up side by side. XRP on the USD pairing for a very long time was chilling at under $1. And as you can see here, was trading at between, looks like 30 cents to 50 to 60 cents between 2022 to 2024. So this was a 2 year period in which XRP was trading at 90% below its highs of $3, which isn't actually on this chart because let me get a better chart with the full price history. But here you go. Okay, so XRP was trading in this range here between 30 cents and 80 cents for literally 2 years, after correcting from the highs in 2017 at 340. And even prior to this consolidation, we had another consolidation period here as well. So we can mark that off. And then, of course, the SEC lawsuit happened right here around 2021 and I believe 2021, or it might have been 2020. But long story short, XRP stayed down here for a long period of time. During that period of time, of course, a ton of people all over Twitter were screaming about how XRP is dead, how it's never going to recover, how it'll never see above $1 again, how it's over for what was, for a very long period of time, the third largest asset in the entire space. What was one of the first 10 assets, I believe, ever created in the space. And everyone just said, okay, it's dead. It's never going to rise again. If you're buying it, you're wasting your time. And then in literally, this was 2 months here in 2024, we pumped from 50 cents up to $2.91. That's a 6x rise in literally 2 months. So if we look at the XRP Bitcoin chart, that was this pump that happened right here from the 11th of November up till our range highs right here. And what I want to kind of emphasize here is that if right now everyone's talking about how alts are dead, there's never going to be an alt season again. If you're buying alts, you're a sucker. Alts are never going to rise. You're better off in Bitcoin. Let me share this with you because it puts things into perspective. On a coin like XRP, if you bought anywhere at these range lows at the red line, then today, where XRP Bitcoin is trading at, you've currently outperformed Bitcoin. If you bought XRP in December of 2020, when the ratio was down here at the red line, then today you're up against Bitcoin by 221%. So let me repeat that. If you bought XRP in 2021, in January, February, then despite the massive bull rally that Bitcoin has seen, you're still better off in XRP than Bitcoin by over 2 times. Meaning an investment of 10K here into Bitcoin might have made you, I don't even know what the prices were, might have made you 50K. An investment of 10K into XRP at the same time would have now made you over 100K today. So the point is that despite the lackluster performance of XRP over the last few years, if you bought at the right time, meaning when XRP was down in the dumps, then even today, with all that Bitcoin has done, rallying up to 100K plus, you still would have outperformed Bitcoin. Someone holding XRP for the last 4 to 5 years who bought in January, February would have outperformed Bitcoin at today's prices of XRP and Bitcoin. And so the idea that I kind of want to drill home is someone could have been accumulating for the last 4 years and would have had to wait 4 years for this outperformance to occur in 2 months. But when it did occur, it now put them in a better position than if they would have bought Bitcoin back here in 2021, 4 years ago, 5 years ago. And so the point I want to drill home is, yes, there's going to be a long period of time during which your altcoin is trading at 90% below the highs, and everyone on crypto Twitter is screaming about how you're an idiot and how you're a loser and how you're stupid for buying this altcoin that's down 90% from the highs, and all that can change in literally 60 days, and then the roles will be reversed and you'll have outperformed those people who have been accumulating Bitcoin, for example, for the last 4 years. I'm not saying that every alt is going to do this. I'm not saying that every alt is going to outperform Bitcoin. What I am saying is that those alts that are high quality alts will underperform for years at a time, but that doesn't mean that everything can't change within a month or two. And when the conditions are right, they will change, in my opinion. It's a pretty common concept of risk to reward. And we know that in traditional markets and in investing as a whole, there is a direct correlation typically between the amount of risk someone is taking and the expected perceived ROI if that investment succeeds, right? We know that if you invest in treasuries or bonds, you're not going to get 30% a year. You're not expected to get that. Why? Because those assets are considered relatively safe. At the same time, we know that if you invest in an index fund where you diversify it amongst a number of assets to potentially reduce overall risk, your yield may not be as great as if you were to invest in higher risk individual stocks. This idea of those that take more risk ultimately yielding higher ROIs on successful investments is very, very common. But for some reason in this space, people seem to have concluded that Bitcoin, despite being the safest, potentially longest lasting crypto in existence, the conclusion has been that Bitcoin will also give people the greatest ROIs. Now, there's no point in looking at altcoins because all the altcoins are going to go to zero, and Bitcoin is going to yield the greatest return over the longest period of time. And again, for a lot of altcoins that have no substance and no value and no purpose, that is going to be true. But for those altcoins, if you're able to identify the ones that do have value, that do have substance, that are building something legitimate, odds are if you're buying them when they're really cheap against Bitcoin, again, like the red line here on XRP Bitcoin, odds are that more likely than not, as long as that altcoin survives and continues doing what it's doing, that is building and growing and expanding, your ROI will be far greater than it will be on Bitcoin when you're buying at these extremes, right? Now, obviously, someone who bought XRP when we were trading at the highs of this range is currently underwater, meaning they would have been better off buying Bitcoin. Someone who bought at the lows is better off because they bought XRP. Someone who bought in the middle of the range is about at break even right now. So obviously there's some nuances and you have to pay attention to where you are in the big grand picture. But the point is that when alts are cheap and they're down at the bottom 95% off the highs, and the potential downside is literally zero and the potential upside is hundreds of percent higher, it makes sense to DCA into these alts over time. You can wait and think I'll jump in when XRP is ready to go, like a lot of people thought they would do when XRP was trading at 50 cents. And then literally within, what chart is this? This is a weekly chart. Within 3 weeks, we were trading at $1.50. So if you were sitting on your hands and saying, hey, I'll buy XRP later, it's not ready to pump yet, look how slow it's moving. Before you even knew what was happening, it could have been 100 to 200% higher, and you could have missed your opportunity to buy or potentially FOMO in at a local high, like at this $2 level or at the $3 level, all because you didn't plan ahead and you weren't willing to wait, and you thought that you could outsmart the market and jump in at the very, very pico bottom right before everything goes ballistic. Realistically, I understand that I don't have that capability. I can't watch and monitor the 10 altcoins that I really, really like or the 5 altcoins that I really, really like while actively trading and managing my trading portfolio, while actively living a life and doing what I'm doing outside of crypto. I know I can't do that. I don't have the skill to identify the pico bottom every single time and magically buy everything I need right before we go off on a 6x run in 2 months. And because I recognize that, my goal is simply to accumulate in these large, tight ranges when the coin is down 90% from the highs and wait and simply wait for what I believe is an inevitability as long as this space is not ending tomorrow. And again, if anyone is here watching the stream right now, we probably all believe that crypto is going to be here 5 years from now. So to me, it's not a matter of will this coin pump again? It's a matter of how long do I need to wait for this coin to pump again? And I have all the time in the world to make a 10x return in 2 months. I can wait 2 years for that. I can wait 3 years for that because in traditional markets, a 10x return after 5 years of waiting or after 10 years of waiting is absolutely fantastic. And people in traditional finance would kill for that under normal circumstances. But again, in crypto, because things move so fast and so aggressively, it's kind of spoiled our expectations for ROI on our investments. And people are getting impatient about having to wait for a 10x. Oh, I got to wait 3 years for a 10x. Let me find a meme coin that's pumping right now that I can make 30% on. That's like the mentality that a lot of people have, and that's what screws them over because they end up buying these assets that are pumping on hype that doesn't necessarily last. And then when they're in the gutter, now they're at a point where they're not confident about their investments, they're not confident about what they're holding, and now they're then selling or capitulating at a point where people like me are actually buying everything they can. And so I hope that makes sense.
No, I think the biggest issue people have with altcoins, and you touched on it here, is the waiting game, right? And so the common advice is just buy Bitcoin. And I agree. It's like, well, that's kind of like telling people to just buy bonds. Like this is the safe thing, right? It's not going anywhere. But you're not going to, a reasonable proposition for the average person to expect to make any money on Bitcoin. Most people don't have $70,000 to put into one Bitcoin and then needing it to go to 200, 300K to triple their money. Like that's crazy. So, yes, the outsized gains always have been and always will be in altcoins. The tricky part is mastering what you're showing here, which is understanding the alt BTC ratio and being patient. And I think that's where most people lose their ass is they come into altcoins during mania, during what we saw with WIF and Fartcoin, et cetera, when it seems like these things just come out of nowhere and they go up forever. And while those periods do exist, there's also another way to make money on alts, which is timing these rotations that you're talking about, where it's like, hey, there is going to be periods of time, and it might take a few years in between them. And some people call that alt season, where alts on the whole, or at least some alts, will outperform Bitcoin. And that game's getting harder because there's so many more alts now, and so many of them are junk, right? Like, at least back in the day, most of the alts at least pretended to do something. Now many of the alts don't even, act like they do anything. It is a meme coin and nothing more. And there's only so much money and attention that can go around. But if you're patient, if you're willing to wait, you can find the opportunities out there. They absolutely do exist. But I think most people lack that skill, the patience, and then when it is time to execute, like you said, they're already burnt out. They're no longer paying attention, and it can be very difficult. So I applaud you for having the patience that you do, because I've seen you update certain altcoin charts for quite literally years. But I know, as someone who understands what you're doing, you're waiting for these things to come to an area of discount, and you're like, this is a good, historically, based on this chart, this is when you want to be rotating into this coin. And if you end up being right, the return will be outsized, right? So pretty cool.
Quick comment, maybe, before we go on. The thing you mentioned about Bitcoin being at 70K and even at today's prices, the point is, again, we were very vocal. I'm sure you were as well, back down at 10, 15K, 3K, all those other times. We were screaming from the rooftops, hey, it's a good time to buy Bitcoin, right? And again, back to your point about it being at 70K now and the ROI being even less, considering where we are at. I think that kind of ties into the start of this video where we talked about, has Bitcoin topped, and the three different scenarios that could play out from here. And a lot of people are they're anxious about Bitcoin because they're like, this is the only investable asset, and I want to get in, and it's at 70K, and what if it's going to 500K? Is now the time to buy? What if it's going to 10K? Should I wait? And I think, for me at least, my strategy at this point in time, and I've been very vocal about this on X as well, is that, to me, it doesn't really matter which of the three directions Bitcoin goes, which of those three scenarios plays out. Because in my eyes, like you just said, the ROI right now, the biggest gains, are not in Bitcoin anyways. I'm not actively buying Bitcoin at 70K. I have no interest in that. I was buying Bitcoin at 3K and at 6K and at 15K, but I have no interest in buying Bitcoin at 70K. So the only reason that I follow Bitcoin actively is because it will help us with identifying when it's a good time to buy alts, maybe, or when alts may move. But the focus on Bitcoin is simply just to get an idea of where we may be at a place with alt. It's not necessarily because I'm looking to buy Bitcoin at 70K. So whether Bitcoin goes back to 150K from now, or whether it chops around between 70 and 90K for the next year or 2 years, or whether it drops down to 50 and then goes back up to 70 and then goes back down to 60, to me is irrelevant, because at the end of the day, it's not what I'm focused on. It's the altcoins. So I think that's also important to recognize that, we track Bitcoin, but again, at 70K, the ROI potential on investing in it at these levels, we understand it's down 50% from the highs, but this is still, in my opinion, not the place where I'm jumping aggressively into Bitcoin, because, as we know, we could certainly go lower if this ends up being the more bearish scenarios. We could certainly see 50, 40, 30K, in my opinion, potentially lower. And so that is when I'll get interested in buying Bitcoin. But for now, again, the focus is on what asset is down 90+% from the highs that gives me some indication that it's not here. It's not like a fleeting asset. It's going to be here 5 years down the road. Those are the assets that I'm interested in, irrespective of whether or not Bitcoin is topped, or whether Bitcoin's going to be ranging for the next year, or whether it's going to make new highs, if that makes sense.
I think the only way to have this kind of insight is to be here for more than one cycle as well, is you see this undulation between alts and Bitcoin and this ball of money that we have in crypto. And as it ebbs and flows, and I agree, when I look at the Bitcoin chart, to me, Bitcoin is not in an area of value yet. It's getting there. It's getting closer. I agree. I like the kind of, 30 to 50K zone. That, to me, is a discounted price based on the current run price leg that we're in. That's where I think Bitcoin becomes interesting for long-term accumulation. But for those of you who are like, hey, where can I find value in crypto right now? you like it. Like I love Hyperliquid. I think Hyperliquid's super cool. I think they're making a ton of money, and I like what they're doing. I like the company. I think there's a lot of bullish things there. But that is a coin that is actively appreciating in price. It's at the range highs. It's outperforming Bitcoin. It's not an area of value right now. And so what Cred is trying to show you here is there's a lot of altcoins with fundamentals that are down significantly. And just because they're down 90%, I know a lot of people in the chat, it could go down lower. Yes, it could. Some of these coins that he's watching that look like they're accumulating, that are at the range lows, can go down more. That is trading, though, right? Like that's the risk you're taking, because the goal here is to find something that is bottomed, one, and then two, has the potential for an outsized gain. And if the risk is that, yeah, it can go down further, it's like, yeah, well, of course. Just because something's down 90%, it doesn't mean it has to ever pump again. That's not what he's saying. He's saying you want to look for these coins that have that staying power for reasons like utility, etc. Match that with the chart, not just the dollar chart, but the Bitcoin chart as well. And that is where you can find some of these asymmetric bets, these asymmetric opportunities. And I'll put both my hands up right now and say, this is not my game. That's not the game I play. I'm more of an active trader of Bitcoin than I am an accumulator, long-term swing trader of altcoins. But in my opinion, regardless of what you think about Cred, I think he's one of the best long-term position traders based on his ability to view things on a very macro level and have extreme levels of patience. It's something that I'm not built for. And by the way, guys, that's okay. If you're listening to Cred talk here and go, I don't want to fucking wait 2 or 3 years to make a 10x, you don't have to. No one's forcing you to do what he does. He's just sharing charts and perspective in a much different way. And I believe he's one of the people on crypto Twitter who's firmly in his own lane. Something will happen and people immediately freak out. They start backtracking their analysis that they posted last week, because a lot of us are tracking markets on a very short term, right? So when something happens and price drops $5,000 in Bitcoin, people are freaking out saying, holy shit, I tweeted to everyone it was going up. It just went down. I better go post a new chart and do damage control, where Cred is working on a larger time scale, in my opinion. And it's always been something I've admired and have been interested in watching. And it's worked, right? It's worked many times. I know a lot of people are like, oh, he was bullish during this. Like, Cred was one of the few bull voices many, many years ago when everyone thought Bitcoin was dead. And he was buying at those 3, 6, 10, 15K levels publicly. The problem I think that we have right now on Twitter and just in general in the trading space when you're an influencer is people are, what have you done for me lately syndrome. Oh my God, your last call, you said this was going to happen. It didn't happen. And they don't see the breadth of your work or even understand your strategy at all, nor should they have to, right? So I do think for those of you in the chat who are saying, oh, well, this was going to happen. It's like, listen, guys, the way he just explained things, you got to realize he's looking at a very long time scale. That might not be your type of trading. I'm not patient enough for that. That's okay. But if you're someone who has a job, if you're someone who wants to live a life and not be a slave to the tape, looking at the type of charting that he does, looking at things on a macro view, there's a lot of alpha in what he just shared here, going over XRP, BTC specifically there. It's a perfect analogy that you can use on all altcoins, saying, okay, where are we relative to Bitcoin? Where are we relative to the dollar? And where is value? And then that's where you want to pay attention and realize that there might be weeks, months, even years in between these opportunities. But you spread that out across 10 coins, all of a sudden, you're doing something, and you can trade on top of that as well. I know he doesn't always share it, but I'm sure Cred's actively trading too, the ups and downs. So there's a lot of ways to make money in these markets. And I think the way that you do it has always been very interesting to me because it's different from what I do. That's why I always love chatting with you. We have some similar conclusions, but we come at it from completely different ways. So you got any closing remarks here, man? I want to pose you with a question to end the stream here, or at least to end this section. But you got any closing remarks you want to share with everyone?
Yeah, sure. So I appreciate that, Mayne. Appreciate the kind words. I think, I think another key thing to remember is that I do have separate portfolios, and one is exclusively for investing in assets like this that I don't actively trade. And then I actively trade just like you do on the day to day, in a shorter term portfolio. So anything that I'm describing here about accumulating and waiting 5 years, that's all happening in a portfolio that I'm not actively trading. And if I want to take advantage of lower time frame moves, whether that be up or down, I have a separate portfolio for that. And keeping them separate allows me to not have to worry about my long-term investments on the day-to-day and focus more on the intraday moves. And a lot of people talk about opportunity cost. So, well, I don't want to tie up my money for 5 years in an asset that's sitting down at the lows and is not going to pump. And if you are an active trader who knows how to properly use leverage and margin and understands all that and risk management, et cetera, I mean, we're in a space that offers 100x leverage. There's no opportunity cost when you can trade a position with 1/20th of the capital that you normally need. You can trade a position, $100,000 position with $10,000 the same way you would with $100,000, except what I'm doing is I'm putting 90K into spot holdings and then I'm trading 100K with $10,000 on 10x leverage. Obviously, there's more nuance to it, but the gist of it is that opportunity cost isn't really an issue when you understand how to use leverage, and you ideally keep your portfolio separate so you're not mixing in long-term and short-term ideas. With that being said, there's another comment that I want to make because I hear this a lot on Twitter. People are like, well, just because your altcoin is down 90% doesn't mean it can't fall down another 90%. And it's like, yeah, that's true. And everyone's like, oh, that's really good. And they're like, that's true. I shouldn't buy right now. It could fall down another 90%. And I'm like, we're talking percentages. So if Bitcoin goes from 100K and it falls 90% down to 10K, yes, it's true that it could fall 90% more from 10K. It'd be at $1,000. And then yes, it's true it could fall 90 more percent from $1,000. It'd be at $100. And yes, it's true it could fall 90% more. And you can repeat that like infinity until a penny, right? Like 90% down lower can happen an unlimited amount of time. So anytime someone says, well, just because it all is down 90% doesn't mean it can't fall 90% more, they'll be true every single time they say that, whether they said that when Bitcoin was at 50K or they said it was at 30K or 20K or 5K or $500. And so if you're using that logic to justify not buying an alt that's already down 97% from the highs, then you're really just getting yourself into a position to make excuses for not pulling the trigger. So that whole concept of we could always go lower is, in my opinion, a way for people to justify being bearish at the bottom, at the lows, when it's really the time to buy. And of course, we're on Twitter, and sentiment in the deep in the bear depths of the bear market is predominantly bearish. And so for engagement, it works and it sounds great. And people are pissed off and they're upset that we're down at these lows. And so when you are on the side of, and that's the other thing, is that because we trade down at these lows for like such a long period of time before actually getting 3 months of upside that blows away all the previous downtrends, someone who's bearish the majority of the time at the lows is going to be able to claim that they're right for 4 years straight, maybe, before the person who's bullish at the lows gets redemption, right? So I've been bullish at Bitcoin at 3K. I've been bullish at Bitcoin at 15K, all those major lows. And I can guarantee you that there have been periods of time where I've been bullish on assets like XRP that were down in the dumps at 18, 20 cents, where I received this anger, this hate online for literally months or years in advance. The same people ragging on me because XRP was down at 18 cents for a year or two because it was consolidating, it was at an accumulation period. And then in 28 days, it goes up 7x, and those guys are nowhere to be found after telling you to sell the bottom. And that's just the reality. The reality is that when an asset is at a discount, as you call it, for a long period of time, the people that are bearish there will be right for a long period of time about the asset not performing. But as soon as that changes and it goes up 7, 10x in a matter of weeks or months, they're going to be nowhere to be found, and you will have sold the bottom by listening to them. So please try and separate your thoughts from CT and Twitter and online social media, because what you're seeing on there is all done to get your engagement. And it's not popular to be a bull when an asset is down 97%. It's very popular to be a bear. And the opposite can be said when we're at peaks, like when Bitcoin is trading at what eventually I believe will be a blow off top, maybe over 200K. You're going to get people that are calling for 500K or a million. And I'll probably be saying be cautious. And there are people that are going to shit on me for that. So you're always going to get those types of viewpoints on social media where the primary driver is engagement. And the unpopular voices are often going to be overwhelmed by the more popular ones at those times. But it's usually the guys that are not moving with the crowd that end up being correct. So that is my closing statement. And yeah.
Hell yeah, dude. Appreciate that. And I completely agree, guys. I think there's a lot of people on CT who gain popularity very quickly in these bull runs. And sometimes their aptitude and their skill is confused with the fact that maybe they were just a bull in a bull market, and they've led a lot of people to slaughter. And there's people who have been here cycle over cycle, putting out useful information, Cred being one of them, that absolutely I think, you should be following, paying attention to. He's got a great YouTube as well. So I'll leave you with this, bro. Polymarket has a market right now predicting what price Bitcoin will trade at in 2026. So basically, will it hit this price by the end of 2026? So Jan 1, 2027, midnight, whatever the exact time would be. And the options vary from as low as $5,000 up to $1 million. I treat these almost as like binary options. I'd be very, very interested to see how you view Polymarket bets, because it's really kind of like a yes, no with like a time factor, right? Yeah. So it's like, by the end of the year, will Bitcoin hit any of these prices? And like, I don't know, man. Like, you can buy, people are pretty weighted on the downside. Like, there's a lot of people, almost half the people think we'll hit 45K this year. Do you dabble in these markets at all? Have you been paying attention to prediction markets? Do you find them interesting?
So I've definitely been paying attention to them. The only reason I don't actively dabble in them to a big extent is because I recognize that at the end of the day, my expertise and my skills are in looking at a chart and interpreting that data. I also recognize that, like you said, these Polymarket bets, a lot of times they're treated like options, and there's ways to hedge your bets. Obviously, there's ways to hedge your bets when you're trading perps too, but there's ways to hedge your bets when it comes to trading options. And there's professionals out there that do that for a living. They actively trade options, and they know how to take or identify, I guess, bets like the ones on Polymarket, where they can potentially hedge in specific ways to kind of extract value with lower levels of risk, where they're not really taking these like blatant naked bets on price. But even though that's what it seems like they're doing, they're taking advantage of the markets available to place bets and then hedge those bets on another venue potentially in such a way that they're able to extract value without risking nearly as much as those taking naked bets. And because that is not my area of expertise, and I don't quite understand how to do all that at that level, it's something that I typically avoid. Because to me, if I jump into Polymarket and make bets on Bitcoin price, it is a naked bet. And to me, because I already know how to actively trade on the charts, I can get better risk to reward just taking trades on perps as opposed to making naked bets that I don't know how to hedge against. So because of that reason, I haven't actively dabbled in it, but I recognize that there's absolutely potential in there. And I have some buddies actually that are really big on options and like these big brain guys. And I'm like, I got to get them into Polymarket, because something like that, where they have the ability to place bets in what is becoming a more efficient market, but it's still relatively inefficient. Something like that for someone who understands options and can hedge those things the right way.
Totally.
I think like there's so much money to be made. So
yeah, and
not for me, but I can see it's definitely there for certain.
You got to tell them to use code TraderMayne when you get them to sign up. And they trade big dick volume. I've been actually preaching to people that like this is a way to have a fixed downside cost on a prediction that you're making. So you can be bullish on Bitcoin, but you can also like hedge it, or same thing with like oil. A lot of people are like trying to predict what oil is going to do. And I'm like, there's so much macro uncertainty. A tweet from Trump can change the price of oil drastically. Whereas on Polymarket, there's almost less variables. You're like, okay, I'm betting $1,000 that oil might hit this price. And now you're just kind of waiting, right? And there is that options aspect of it where there's kind of time decay. So the closer you get to expiration, the further you are from resolution. Like I bet that there was going to be a rate cut at the next FOMC meeting. Based on everything that's going on right now, people are actually saying no fucking chance they cut rates. They're thinking they might raise rates. So that bet's eating shit. But like conversely, if the market were to correct and all of a sudden they're like, hey, rate cuts seem more probable, you can close that trade out early. I know you don't use Polymarket, but I'm going to force you to make a prediction anyways, and we're going to hold you to it, and we'll lambast you if you're incorrect. If you had to pick a number that Bitcoin will hit at the end of this year, is that number above 200,000 more likely, or is it more likely that number is below 40,000?
Oof.
Or let's say make it a little easier. We'll say new all-time high more likely than below 40K.
Okay, yeah, new all-time high, easy.
Okay. There you guys heard it first. So if we don't have a new all-time high by the end of this year, he's going to delete his channel. Dude, thank you so much for coming on. As always, it's always a pleasure. It's always great chatting to you, and I can't wait to do this again in a couple of months, man.
No problem, and thank you for having me, man.
All right,
Always
thank
a
you so
pleasure.
much. All right, everyone. I hope you enjoyed that stream. A little bit different than the usual order book show, but every once in a while, we're going to bring a guest on. One of my favorite things about having such a large following on Twitter is I have the ability to reach out to some of what I believe are the best traders in the space and get them on here, ask questions so they can share that wisdom and that experience with you guys. I think there's a ton of value in these types of videos, so I'm going to definitely do more of them. So if you want to see more, let me know in the comments of this YouTube video here. Who do you want to see me bring on? I'll reach out to anyone that you want me to talk to. You let me know. I'll do my best to bring them on. If you want to support me and the show, make sure you're following Order Book Show on Twitter. We just hit 2,000 followers. That's growing nicely. Make sure you follow the Order Book Show on Instagram. And as always, all other information can be found on my website, tradermayne.com. I'll be back with another episode of the Order Book on Thursday. Appreciate you guys all.